Good afternoon or evening, wherever you are. Let's head on into Lesko Help 2. All right. Here we are in Lesko Help 2, and we have a lot of different changes that are going on. So I think I will go live after this class to just kind of walk you guys through all those changes. I don't want to take up our time here. Instead, what we're going to do is we're going to work through the 1020, or excuse me, yeah, the 1023 EZ application worksheet. You have to actually fill out a worksheet before you can even fill out the 1023 EZ to make sure that you are actually able to utilize the 1020 EZ instead of the 1023 not easy, right? And so I read through this whole worksheet and I did all of the worksheet part, but there were some questions that I had. And so this first one, and I'm not sure, are your slides something a little bit different than exactly what's going on here, or should I not worry about the application?
Yeah, don't worry about the application because we're going to go over everything that you had in blue. Everything is on there.
Okay, so I had several areas that I highlighted that I either needed clarification for, didn't understand, or wanted to make sure that I was doing what I was supposed to, things like that. And then Megan, I'm going to let you take the floor because I don't necessarily know what you have going on here. So should I pin you? Are you sharing?
Well, I just want to make sure that, like, as we do this, can you share your? Well, I guess yeah, because I can read this to them, and then you can share your screen about the application and show them where that is on the application, maybe.
Okay, let me then pull that up.
Okay, sorry about that.
No, that's fine.
Kitten. Oh my gosh, this poor cat is just walking around like just crying at nothing. I don't even know why.
Well, we are actually introducing a kitten at the moment.
Really?
Yes. It's in my daughter's room so that it's going to have, you know, that month of separation.
Yep, yep. This one is a polydactyl on all four paws. I've never seen that before.
Oh, interesting.
He's got extra little fingers everywhere.
Right?
He's like a monkey.
So this is what I have right here, right? And what we read through. So I can get to the point that the first area was. Okay. This is the first area that I have highlighted, and here are your slides. So how can I
all right, so your first area is the what was it called? Back real fast. It was the number section 3, right?
Yes.
Line 3. Okay.
Month tax year ends. And okay. I wasn't sure where I should start my tax year, right?
Right. Okay. So your tax year is going to be either June or it's going to start in January. So it either ends June 30th or December 31st. So July or January.
Those are your two choices that you have.
Yeah. I don't know why they make it seem like you have more than that, but you don't.
So it would probably make the most sense to start from December 31st since I haven't really started and we're still working towards the non-exempt status and all of it. Does that sound right?
Right, right. Well, I mean this is where like when you get your funding. Okay, so the government funding ends in October. I mean, it'll restart in October, right? So or November. I mean. So that's when the government like finance. That's why we always end up going into a government shutdown or some type of government issues, is because the finances have to be complete and the books have to be settled. So that's why this all happens at this time of year all the time, and that's why voting happens in November. So it's at the beginning and ending of a funding term. So that is the difference between government funding and then they fund us. So then then that's when our year starts at January would be our first of the year, the fiscal year. And then we have, some organizations will end in June, and it's just what they chose. So I've always just done the January thing because it makes more sense because everybody else, what I'm saying, why would I want it to end in the middle of the year unless I'm in school or something? I don't know.
Again, right? Because new classes start at the
Right.
beginning of January just as much as
It's
they start.
confusing as heck.
Yeah.
My Indian tribe is because I'm Native American, like, and we have our whole tribe. For some reason, our fiscal year ends in October, and I'm like, how'd you guys do that? And then I realized they're a government agency. Duh. I was like, oh, but I was like, hey, how'd you guys get October? But yeah, no, it's up. So
All right.
October
And
1st
so
is the
is that
beginning
what
of their
this is
year.
here, or is this for the next part that I had highlighted?
No, okay, this is just the intro. We want to go over each of the areas. I can't wait, let him go forward. There we go.
Do you want me to read, like, make it
Yeah,
larger?
the next page, it says what we're covering is the compensation and financial transparency, financial transactions and conflicts, the purpose clause, the mission statement, leadership identification, foundation classification, dissolution statements, and activities and community impact.
Okay. Those are the ones that I had highlighted. Yes,
Yeah.
absolutely. Mm-hmm. And so do you want to start going on to the next slide then?
Yep.
Or
Yep. I
okay.
can do that. And then so you want to show them where this is on the application, so that we're all kind of
All right. Well, we actually would go with leadership identification is the next line that is really covered because it's
that's fine.
line
This is
8.
section 1. Section 1 is leader compensation of officers and directors and trustees.
Right. But that comes
That's
later in the application, right?
Oh,
Like,
shoot.
does that make sense?
I thought
Yeah.
I did put it in order, my bad. Well,
We're all running on the fly, right? So can I
Yep.
click this? Will it take me to that one?
yeah.
Yeah. Okay.
No, just kidding. That would
Okay,
be cool
so,
if it did.
right?
I didn't have enough time for all that though.
Okay, hold on. I'm confused.
Suggestions.
So leadership identification.
Here it is on number
It says number 4.
okay, so it's on slide.
Oh, okay, I see. I see right here. Okay. There we go.
That was rough.
What's that?
Thanks guys for being patient. Okay, now we got it together. All right. So this is just pretty much where who must be listed and what information must be provided, right? You just need a full legal name and their address. That's pretty much it. You don't need to have, their background information. You don't need to know, they don't need to know why you chose them as, as part of your board, but you need to have at least 3 members minimum, and you need to have their full name as it appears like on an ID or whatever, or a passport. And then you need to have a complete mailing address for them. And then if you can list their official titles, or if you're not sure yet, those things are fluid. You have up in state of California, you have until a year to finalize that document. So that part of the document, so you don't have to have that all set in stone, but that's not true of every state. Every state has their own legal things. So you need to know what is true in your state.
My state is pretty lax, but for the IRS's designations,
yeah,
you have some flexibility as well, right? So you can have a president or chief executive officer, treasurer, chairperson, but then it says any officers, directors, and trustees who are substantial contributors not already listed above, right. And any other officers, directors, and trustees who are related to a substantial contributor not already listed above, voting members of the governing body, and officers not listed above. So there is quite a bit of flexibility within your titling.
And the case with this is the IRS uses that information to pretty much verify that real identifiable real people are actually responsible for your organization's governance and decision making, not like figments of our pigments type thing. And you can't just
right, like you guys have heard of shell companies. That's kind of a part of that. They want to make sure it's not this fictitious entity that somebody created for whatever purpose and just set it out there, and there's no real human being attached to that endeavor.
Right. And if you have multiple organizations like I do, like you can't have, they're looking for consistency in names and like to see if like, oh, so they're going to be the same trustee. Yeah. Like if they don't think that it's actual genuine involvement when you see numerous people on the same organization. Okay, buddy. Please. So like they see the same few people on multiple organizations with like, there's one leading person, like if it were all my organizations and they're like, okay, let's say he's doing something hinky. And that's what they're looking for. They're looking for those red flags, and that's why they're asking you these types of questions. So you want to just have 3 names, and it is important, but it's not something that's going to make or break your you have to just get your 3 names together, I guess is what I'm saying. But it's not gonna affect you too much.
Since talking about that with you and all of this, I've talked to Kendez, who I believe is here with us, and yes, Benny and Ethel. They're all a part of it. I haven't gotten a chance to talk to Tammy yet. And so a question around that, if I have an even numbered board, but as the chairperson or the executive officer or whatever I decide for myself, I can have 2 voting positions. Is that right?
I believe so. It depends on how you set up your bylaws. So that would be in your
That's
bylaws.
what we had in our nonprofit for GNN was
Okay.
one person did get 2 votes that they got to cast. And so we'll go through the bylaws as well today while we're talking through all of this, you guys. Okay, that's a part of, I believe, what I had highlighted in here, or at least something we need to talk about. All right.
Bylaws, it should be its own separate whole thing because the bylaws are so important. Everything you want to do should be in your bylaws.
Yeah. Okay.
All your policies. So like that's yeah, we'll get into that. Give me 1 second.
So
I'm gonna go
I'm sorry.
I'll be right back.
Okay, so we're going to move over here now. That was line 8 out of section 1, or part 1, excuse me, identification of applicant, line 8. And now we're going to go into part 2, organizational structure, and we're going to line 5. Right here. And that's your organizing document. And so that is going to be your bylaws, I believe. But if Megan isn't there to say yes or no.
I'm right here.
Okay. So the organizing document would be your bylaws. Is that correct?
Sometimes your organizing documents usually talking about the state, like whatever you formed with the state, your organization.
Oh, okay. Okay. So, right. Let me go back to our little list here and find out where we're going next.
Right. Sorry, it's not all in order. We can fix that though.
Yes, absolutely. Okay. And so line 5, purpose clause, the foundation classification. No, not that,
That would be your purpose clause and mission statement.
Oh, I found it. Yep. Gotcha. Okay. So we're going to 3. And here we are.
That wasn't that bad.
Yes, it's all here, right?
Yep.
So purpose clause in organizing document, crafting language that meets IRS standards, your organizing document, whether it's articles of incorporation, which is what I have, a trust agreement or association articles must contain a purpose clause that specifically describes your charitable mission using language the IRS recognizes as qualifying for 501(c)(3) status. Do you want more red? What do you want to talk about this?
No, but okay, so it's not about, you don't want to sit there and go like, hey, we help kids not go hungry. You know, like that's not telling you what it is. So I have like examples on there. Like you don't want to be vague, but you also don't want it to be long. So like very just short, simple sentences. And it has to be specific charitable purpose. And if you're unsure if what you're doing is a charitable purpose, then make sure you go through your NTE codes and all that other stuff that you like before you get to this part, because it should be a very simple situation. And when you're doing this online and filling out the form online, it actually goes red when it doesn't agree with what you're saying. So it will go green when you're good to go, when you're allowed to move on. So it won't let you move on until you've actually put something good in there.
That's kind of nice in a way. All right. So I think we're pretty good there. And now we're going to move on to a part of line 6. So we're in line 6, and it is when we get to this following. Oh, and that's kind of what we just talked about, right? The acceptable clauses. So that was still all contained in there. Okay, so now we're going on to the dissolution clause, and that's line 7. Here we are. Okay, and we have that in your nice little layout here. That's number 6.
So yeah, that's
okay. Here we go. So acceptable dissolution statement. Clean that up. Okay. Acceptable dissolution statement. Why the IRS requires dissolution language. The dissolution clause answers a critical question. What happens to your nonprofit's assets if it closes down? The IRS requires specific language in your organizing document ensuring that upon dissolution or ceasing to exist, right? All remaining assets transfer to another tax-exempt organization or government entity, not to private individuals. So I'm guessing you have something down here as well for the specifics of that. Is this where you'd like to be in your kind of arrow to arrow to arrow boxes.
Mhm. That's yeah, and then okay, so when this whole requirement, it's like it makes it so the premise of your tax exempt status, right? So it's like these assets are for charity only. They're for the public, and like that's what goes back to the whole thing of you never owning your nonprofit. It's never your nonprofit. It's our nonprofit. It's the community's nonprofit. It goes back to that it belongs to the public. You may have started it, you may have founded it, you may have put your heart and soul into it, but it is never going to be yours. So know that going in. If you want a business, that's a business. This is for the public, the charitable good. So just because the individuals who manage it, and the donors and all the grant makers and all that stuff, that it's nobody owns that property, right? So if your organization owns a building and it dissolves, then you need to know, you need to put that into your statement, like your mission, not your mission statement, into your bylaws, where that will go and how that
In your
will.
bylaws.
Yeah,
That's
that would go into your bylaws as well as into your not theory of change, but your all your organizing documents, all that stuff that you started with the state, because your state's going to ask you this too when you go to register. Once you get your 501c3, you go register with the state. They're going to ask you about this because they want to know too. Are we going to get any property when you guys don't work out? You know, I think that's they want to know. So all your assets, including your bank accounts, everything that will go in your charitable, like charity's name, will go to somebody or some entity that is either government or another charitable cause. So if, like, let's say I have two, right? Let's say I wanted dissolution Birth Mom Buddies. Everything Birth Mom Buddies has, I would go into EKCCF for me, and that's how I've set it up. So that's just kind of, yes, it's a lot of forward planning, but you need to have that kind of language in there. And then I have like an example of actual the IRS modeled language, which is it's on the first page. Yeah, the blue. Oh, up on the top. One more up.
Oh, okay, gotcha.
The IRS model language. Like this is how I have it in my upon the disability. Like you have to speak all weird in your bylaws. You'll see. I have a whole template. Don't worry. But like, yeah.
Upon the dissolution of this organization, assets shall be distributed for one or more exempt purposes within the meaning of Section 501c3 of the Internal Revenue Code or corresponding section of any future federal tax code, or shall be distributed to the federal government or to a state or local government for a public purpose.
Right. And so I have mine specified at the very end saying it will go like birth. You name your charity and then you just say it will go to whatever other charity if you specifically want it to go to one. If you don't, then you can just leave it up to the trustees.
The trustees being, yeah.
Well, if you're dissolutioning, then you have trustees that you hand that off to. So
all right, so now we're going to step into part 3, your specific activities.
Oh yeah, that one actually I think is next slide over.
Okay.
Mission and main activities, right?
Yep.
Okay. So this is where you're going to connect the activities that you want to do with the actual problem that you're solving and the reason that you are a charitable purpose, right? So you're connecting those two things with these statements. Go ahead.
Okay, so I have a question for you. Where you're not allowed to do something for something, you know, it gets all weird. So the reason I'm doing the nonprofit foundation is to pay for the public to have free access to Collectively Rewilding as a for-profit. Is that a negative situation?
No. Okay, so what you're doing is you're providing a service, but you're using your for-profit business to pay for the nonprofit, right?
I mean, at the moment, yeah.
Well, but I mean, like then you'll be able to get grants, and then you'll be able to like subsidize yourself with grants and other funding and donations to allow that to remain free. Correct?
A lot. Say it again. I'm sorry.
That will allow it to remain free. It's like tell me it again.
The main platform I want to be free and open to the public, like worldwide, and nobody has to pay. You know, like Facebook, right? Or X or Blue Sky or Social. Those are platforms that you don't have to pay to participate in. Okay. And then there will be other endeavors inside by myself and others that might cost money if they want to participate further. But the main platform is going to be free to the public because of what the Collectively Rewilding Foundation is doing. Though I do see it doing other things beyond that. That's a big part of of the point.
So okay, so this is how I would set this, that would be like, so like you could then have paid ads where the people are paying you to allow them to run ads in there, or like however you want to structure it. I'm just using that as an example. But like if you would have like something like that, that would be your social enterprise, and you have the foundation would be able to do all of the things, can consistently construct collectively rewilding, have new content, and having that whole thing go free and be free, stay free, and it'd be paying for your overhead of that, of keeping it free, by use of grants, donations, and in-kind donations. Even if you're using somebody's platform, like if Mighty Networks wanted to, then donate the pro or whatever you're on, whatever plan you're on, to you because you're a nonprofit, that would be something that you would approach them with as partnership. So that's where that kind of thing would open up more.
But then myself and other content creators could have paid for portions of courses and things in addition to all of that that's free, right? And that's
right. Yeah. Yep. And there's like a perfect example of this with like some animal welfare organizations I can show you too, because there's like they have their $10 classes of like, hey, that we're gonna get you certified for TNR, we're getting you certified for keeping your community cats safe, But then they have like these paid courses like, hey, do you want to learn to be a shelter certified director and like all this stuff, and they're like really intensive actual college courses they put you together with UC Davis and stuff like that. So like you could also do the same thing, and that would be another generate revenue, but that revenue, because it's going back into the foundation and going back into keeping things free, that is where it would differ. So like if you wanted
I
that
can have a for-profit activity alongside the nonprofit structure for the free. Okay, very cool. And so does that help anybody to kind of even understand what we're talking about, where you have to have something that you're doing for the community, right? And so this is beyond even just my physical community or my state. This is definitely national. And I do already have a couple of international members. So it's going to be able to be for free because I started the nonprofit. And part of the nonprofit's mission will be to fund the platform so that this platform can be a free public platform.
Right.
Does that make sense to everybody?
I heard yes.
Okay. I didn't hear a lot of no's anyway, right?
Right, that's so, right.
Do you feel like this has been covered pretty well then? Should we move on to the next?
Yeah, I mean, are you clear on it? Because you're the one who's about to do the application, so that's all that really matters right now. I mean, yes, it matters that everybody else is clear, but I want to make sure that it's clear during the application.
We're jumping a bit here, guys. Okay, so most of it I felt was relatively self-explanatory or something that we've already covered here with Megan, these kinds of things. And so that's why we're not covering the entire thing. So we're still going to be in part 3, but we're going to jump to line 6.
Which is?
A ways down.
That's your activities, correct?
Compensation.
Oh, compensation. Okay, yeah, that's all the way at the beginning of the thing. I think it's number 2, page 3.
There we go. Okay.
Yep. Section 1 is page 3.
Of this?
Yep.
Okay. All right, there we go. All right, so this is about whether or not you're paying people to do the things they're doing for the nonprofit. Compensation to officers, directors, or trustees. What the IRS is really asking, the IRS wants to know if your organization pays or plans to pay any form of compensation to the people who govern it. This includes board members, directors, trustees, and key officers like your president, treasurer, or executive director. And then you want to take it, Megan?
And just to clarify, this is not talking about salary. Compensation, when using an IRS document, means more than salary. So like their salary is a given because you work there. So like obviously your board members aren't paid, but like your paid executive directors and things of that nature, that this is not talking about that. It's talking about anything more than that.
So as an example, a car allowance, right? That's a good example. That's not necessarily a paycheck, a salary, anything like that. But if you're allotted a car because you do a lot of traveling for the nonprofit, that would be considered compensation.
Correct. And that's not to say that you're not allowed to do that later. You're allowed to do that later if you have a grant for it and it's paying for that specific purpose. but it's you can't just sit there and go make a whole bunch of money with the nonprofit, give with donations, and then use donor money to just fund your car. If that makes sense.
It does. And so Misty Foles got paid through multiple jobs like that when she was working for nonprofit and government entities. So that's a good example for, I don't know, maybe 10 years, something like that. She would have to make sure that she had a grant to cover her next year's pay for the activity that she was providing the community. Right.
And so a lot of people will push no on this button. Like I have on my Birth Mom Buddies, it was a no for me. On the East Kern, because there was a foundation, it was a yes for me. So this is not like a trap question. Like you can hit no or yes, it just depends on what you plan to do. I know that for sure. I wanted to be able to have, since we have a land bank and we had that in the organizing documents, I wanted to make sure that housing benefits was part of something that we could do and allowable, you know? So I hit yes on that, and I was crossing my fingers the whole time. So I didn't know what was happening. I've always hit no prior to this, and then I just like it's not a trap question though, so it's not going to set you up for failure. It is okay to pay your executive directors. It's okay to pay key staff members. And actually, if you're going after federal grants, they expect you to pay them, because how are you supposed to do the thing if you don't have any paid employees to hold accountable for doing the thing? So it's like if whatever your organization does, if you're not paying the people that are doing the actual work inside of it, that looks weird to the government. So if you're going after federal grants and you don't have salaries, they will throw that application out before it even gets to the second phase. So don't just assume that they're asking this to set you up for failure. They're not. They just really want to know what you plan to do.
Very good. All right, now not too much further ahead to line 9, financial transactions. Go ahead.
Wait, let me just go back to one thing on that. You don't have to go back to the slide, but like the one thing they're looking for is that it makes sense and is reasonable. That's what they want to know. Is that if
you're not paying somebody $1 million to stock a shelf every
I can show you guys 990s that are extremely like, holy crap, they're pulling in a whole bunch of money and millions of dollars, but they're also paying out to their employees millions of dollars. It's like, what is left for the organization? That's not reasonable. So and they want to make sure you're being transparent consistently, and then also being correct in the way you're paying people. Like you're paying people a living wage, yes, but it's reasonable,
Absolutely. All right. And so line 9, financial transactions with officers, directors, or trustees. Okay. And do you have a separate one for that, or did we kind of just cover that?
No, yeah, that one is the financial transaction number 2, section 2. Just go down 2 slides. Yeah.
Okay. And so what qualifies as a transaction, right? This section goes beyond regular compensation. The IRS wants to know about any other financial dealings between your nonprofit and the people who govern it, transactions that create potential conflicts of interest or opportunities for self-dealing. Okay, so if you loan some money out from the nonprofit to someone, if there's a rental agreement between the nonprofit and somebody to use a property or facility, consulting fees, purchase agreements, buying goods or services from a business owned by leadership, grants to individuals, providing direct financial assistance to someone who also serves on your board, transactions that don't require disclosure, regular salary or wages already disclosed in section 1, right? We just talked about that. Reimbursement of actual expenses, travel, meals, supplies incurred for organizational business. Small incidental transactions under $100 annually, and transactions with separate legal entities where the connection is minor or indirect. And do you want to add anything to that, Megan?
Nope. Because I mean, it's pretty self-explanatory. You cannot loan money to your board members. You can't you can't have rental agreements with the property without having an MOU for your organizations. It would be an organization to an organization. It would not be to specific facilities that they own. And you can't, like, if you need to have like signs made and somebody on your board makes signs, you can't just automatically assume that that's who's going to make your signs. You have to give the public an opportunity to also bid on whatever job it is that you want done, and then go and have it be fair. And you can actually have, and you can't have them voting on it either. So like they would either have to sit out that entire thing, and then you could do the voting of like what bid we want to go with, or you could do blind bidding and stuff like that, but they would not be allowed to be able to vote on that. That's the difference. So like those are where that gets kind of muddy. You just need to make sure you're keeping things separate and there's no conflict of interest and you're not giving anybody specific special treatment or like extra business just because they're on your board.
All right. Now, this last, I think this might be the last. No, there's a little bit more. Okay. We're going into part 4, foundation classification. It's still in the same, oh no, part 4. Yeah, okay, so we're going to part 4. This is just kind of a random weird area down here. A section 509(2) public charity that receives substantial revenues from a combination of contributions, membership fees, and gross receipts from activities that further its exempt purpose. So that was the one that I thought would most fit what I'm doing with collectively rewilding, is why I have that highlighted.
Okay. So I'm all right. So in order to determine your correct foundation classification, you need to know the types, sources, and amounts of your revenues in the most recent 5-year period. If you're a new organization, base your determination on types, sources, and amounts of revenue you actually received since your formation, together with type sources. Yeah, this is something that they will designate for you. So I'm not sure why they even ask us, because like I've put different things each time, and I still get the same thing out every time. So I have no clue what they process this goes to in the back end of this, but every time I put anything different, I still get the same thing out. Which is
well, there's really only one thing that we can be from my understanding
right.
of these lines, right? Because
Right.
obviously we are not depending on a substantial support in the form of grants and contributions from governmental units.
Nope.
The general public, there could be some, but that's not going to be the main, right? And other public charities. That's not where I'm looking to get funding for the Collectively Rewilding Foundation. So I picked the second one. The third option is an entity that operates for the benefit of a college or university that is owned or operated by a governmental unit. It can't even just be a college or university. It can't be a private university or college. It has to be publicly owned, right? And then the last one being a private foundation other than a private operating foundation. So it's really, for our purposes, we're going to always fall in one of the first two.
Yep.
Right. And then most of us will probably fall into the second one, unless you're planning to get a lot of money from specific governmental units and public charities along with the public. You're going to probably be a number 2 yourselves as nonprofits.
Yeah, well, okay, so like the way you're structuring yours, because you have the business side of it, that's why yours should, I think you're a strong fit for the line 2, like this number 2 one. But like if you're planning on getting just donations, or if you're already been working off just donations and grants, you'd fall into line 1.
Well, the difference for me is that I'm going to try to get for-profit sponsors, not nonprofit sponsors or government sponsors.
Right. And you're going to charge membership fees if like on certain things, and you have sell certain things in there. So that's gross receipts and membership fees. So that's the difference.
Yeah. All right. So you guys with us? Okay. Did somebody have something they needed to say? I heard an unmute. It sounded like somebody unmuted their microphone.
I did, but I don't have anything to say.
Okay. All right, so now we're moving on, still in the same part 4 area, and it's going to take me a second to get there because I've got to really look at what it is to see. That's not like a line. It's so easy to get. Now we're there. Okay, now it's easy. Now, I believe that I would check line 2 if, I have no idea. I believe it's line 2. If I even tried to read this, I'd be like, oh my God, I have no idea what it's even, I'm not even going to try to read it. It doesn't even, this is like a tax expert's area.
Yeah,
really,
it is.
Right? And so,
yeah, and that's understanding your revenue sources, right?
And so we're not a church or a school or a hospital. That's how I can look at the words and say, I'm not any of those things. So I'm line 2.
You're line 2, because you're not even going to worry about that. And that's what I'm talking about. When they do some weird stuff on the back end, doesn't even matter what you pick, they'll pick something for you anyway.
If you pick it wrong, right?
Yep.
Yeah. Okay, so that might have been our last area. Let me just.
Well, we're understanding revenue sources and the foundation classification, right?
Yeah.
Okay, so that's just asking you where your money is coming from. So that's kind of what we were just talking about with the private foundation. So like every 501c3 organization falls into one or two categories: public charities or private foundations. This classification dramatically affects the organization's operations, reporting requirements, and the tax benefits. So most small nonprofits want to qualify as public charities because they face fewer restrictions and offer more favorable tax deductions to donors. Private foundations face stricter rules and additional taxes on investment income and require annual distributions, so that they have to disperse the money. So you want to make sure that when your money comes from, your IRS uses funding sources to determine classification. So public charities receive broad-based support from many donors, government grants, and program revenue. Private foundations typically rely on a single source, which is like family, a bank, a trust, individuals, corporations. And so you want to make sure that you're choosing the public support threshold, right? And that's 33%, 33.5% actually. It says 33% on here, but it's 33.5% is public threshold. That's when that changes over. So that's how much funding you need from the public for to support your thing, which is not that much if you think about it.
I really, once you start talking the numbers, you're just speaking to a blank wall, because I hear you, I hear the numbers. Sometimes it might add up to a little bit of some understanding, but it doesn't. And so that's why especially for someone that is like me and a little bit math dumb, we've got to have a tax accountant or a CPA or something involved at some process.
Everybody should have, if you're doing a nonprofit, you need to have, do not do your own taxes as a nonprofit. I don't care how small your organization is, because
or how smart you are, right?
No, because no matter what, it's a conflict of interest, and you can look at any audit will look at you and say, well, who did your taxes? And you'll say, oh, I did. And they're like, aren't you executive director? And yeah. And they're going to say, oh, well, then you need to not have any communication with me any further, and I need to speak to somebody else in your organization. And that's when you're like, oh shoot, because like now they can't ask you questions any longer about why this transaction went through here, or what happened to this part of the bank account, or what was this charge here. So as you're getting audited, what you need for any grant that most government grants, you need to be audited, or most like any big capital grants, you'll have to have to your audit. So make sure that you have somebody on the outside of your organization that is not a board member, does not work for you, does not do anything else other than CPA for another organization, like works at H&R Block or whatever, an outside organization. Make sure it's as far away from you as possible, so that when you have an actual audit, you are allowed to answer questions and say, hey, yeah, that is very easy to explain. I was using this for gas that day, because that's what they're going to go through with you. So that's why I tell everybody, get your $0 audits when you first open up your organization, because that way you have nothing to audit.
And really, just as a side note, my SBDC mentor is just telling me all the time, it's not something he wants me to do as a business anymore either. Right. I know that's how Matthew continues to do his. And, he's managed it for, say at least 50 years. Who knows how much longer it really went, because I'm sure he was doing businesses or something before he started with what he's doing now. And so things were different, and he's already gotten to a certain point that he could pay somebody to handle it if he gets audited and there's a problem for him, right? He's got that financial stability in his life, but he puts himself in all kinds of risks for lawsuits as a private individual instead of as his business, or instead of as your nonprofit. There's a whole lot involved with that, right? So you guys really should be educating yourselves before you make decisions based on anything anyone else is saying. Thank you, Chainsaw. Yeah, he's agreeing. He's up there like, yep, what she said. So it's a really big deal, you guys. It really is. And no one person should be your go-to answer as your only source, or even just yourself, not just yourself, right? We can all get caught in our heads and have some incorrect information. So we need to find those outside entities to partner with, whether it's a mentor to get started, or a tax accountant, a CPA, getting in touch with the nonprofit association here in Utah, so that I have that additional support and that additional network for this process, right? Yeah. So a lot going on with that. All right, guys, we could take maybe one question. If anyone has one question they really would like to get answered.
I want to add something to just what you just said, because there's also like, okay, so as I'm going through having my foundation and getting my foundation accredited, it is a 1.5 year long process. And they are not only looking at me, they're looking at everything I've ever touched in my history. They're looking at my criminal background. They're looking at everything. They're looking at my educational background, which is almost non-existent except for GIA. So like they're looking at things that I never realized they would be looking at. And it's an intense audit of your life pretty much, and why you want to have these organizations and what you're planning on doing with it, and the structure you have behind you and what you've built. So as you're doing your nonprofit work and your nonprofit setup, keep that in mind. Is anybody looking at this? How would they see it? So like if you're looking at everything you do, your bylaws and everything, as you're structuring it down from how somebody, outside would looking in would look at something, if you're creating things like that from that point of view, you'll be successful, because like that, luckily that's what I've done. And it's scary as hell having anybody in your stuff like that. But like, I mean, they're picking apart my bylaws for everything. It's just crazy. So there is so much involved in it. But it's a work in progress. So, but mine, luckily, I did a lot of things right. Some things I did wrong, but I learned from them and they fixed it. So, and like that's the nice thing about this is like they'll allow you. That's why it takes a 1.5 years, because you have a certain amount of months to fix all the mistakes. And
you know what, Benny doesn't ever get a question because he can't use his microphone, and he had a good question. So let's take Benny's question here,
okay,
if you're ready.
I am.
Okay. Is it best to have a for-profit to start a nonprofit? Megan?
Is it best to what was it? Is it best to?
Is it best to have a for-profit to fund the start of a nonprofit?
Yeah, that was exactly what I did with Birth Mom Buddies. So yeah, I mean, I think it is, because that way it makes things a lot easier, right? Because you have your entire structure based. Like my whole thing was I didn't know if people were going to be able to pay for I didn't know how I was going to pay for the software and all the things, the overhead of doing credit restoration for my birth moms. And so I put in it's all in my organizing documents saying, hey, I'm going to use EC Solutions as a funding source to fund the first part of my organization until I get started. So it's like all the people that I did credit repair for as a business, a portion of all their proceeds would go towards Birth Mom Buddies at the end of every month. And then also I would take donations through that. So people who couldn't pay in Birth Mom Buddies, I was able to give that to them for free and offer that whole service to them for free, even though it was an ongoing process of like up to 6 months, or sometimes a year. It didn't matter because I was able to subsidize it with the for-profit business. So yeah.
That's wonderful, Megan. Thank you. All right, guys, let's go back into Lesko Help 2 and check out those classes. That is what I will jump in here to talk to you guys about in just a moment. So today we have Friday's Coffee and Grants with Michelle as our next class, and that's going to be at 4:00 p.m. Pacific, 5:00 p.m. Mountain, 6:00 p.m. Central, and 7:00 p.m. Eastern. And I will be back with you all on Tuesday, and that is going to be a Q&A with Sabrina at 4:30 p.m. Pacific, 5:30 Mountain, 6:30 Central, and 7:30 Eastern. And Miss Megan will be back for the nonprofit call and her Sundays Lesko Help Presents Navigating the Nation's Grants. And that will be this Sunday, October 12th at 5:15 p.m. Pacific, 6:15 Mountain, 7:15 Central, and 8:15 Eastern, followed immediately by her second class with just a little 15-minute break in there for her to jump from one to the other. All right, guys? So lots to do. Hope to see you in those and all the other wonderful classes. And I will jump on to just let you know what's going on with our calendar here in just a moment for a quick update so that we can get Michelle's class going. Thanks, everyone. Please feel free to unmute and say goodnight.
Bye, all.
Good night.
Bye, guys.
Good night.
Thank you, everyone.
Bye.
Bye.